by an unquenchable need to find the twin flame to your chosen strategy?
Our Where's Bat Live event is the search for trading's ultimate holy grail.
Do you have what it takes to find the elusive bat as we visit 3 cities?
Join 6 Tasty Live speakers
As they present 6 unique strategies
and 6 unique clues using games and probability
to lead to the ultimate prize. Sign up for this free event today at tastylive.com/events.
To my trusted financial advisor, let me know your thoughts on reinvesting what very little remains of my money into ramen noodle stock, now that I'll be eating it for every meal until I die. Best, Cynthia.
Sometimes it feels good to get smart. Get even smarter with live market insights and insults.
They're all frickin' losers. There's no skill.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
First of all, I'm sitting in the captain's seat. I've never been invited to come sit in the new captain's seat. But what I'm concerned with is the size of these screens. And he's still doing this.
Snow, let's take a look. They did not hold that rally at all.
Phil, you got a partial. 973.75.
I'm looking at this like I have to move my head to get through the top, the top symbols. I thought he had like a little computer and he was getting down.
He hasn't learned that he could like swivel his head. He has to see the screen. He has to go like this.
To me. And then, you know what? Money goes to money. You did it. Good job out of you.
Yeah.
I just drove with him twice. Now I'm really concerned that I was just in the car with him for 2.5 hours.
Yeah, it is Thursday, November 7th, a little bit after 5 p.m. Central Time, the best time. You know what that means. It's time for Tasty Live's evening show, a little podcast called The Price of Truth, where we like to explore the incentives that govern our world. As you can see, I'm flying solo today. What that means, it's a highly participatory show. So shout out to everybody that's watching on tastylive.com. Shout out to everybody watching on Tasty Trade desktop and mobile applications. But if you want to be part of the conversation, there's only one place you can do it, and that's over on the soon-to-be reformed Google YouTube. So head on over to YouTube, type in Tasty Live, find our YouTube channel and my big inflamed head on one of those red thumbnails. Jump in the chat, introduce yourself, say what's up to the people. I promise you, I'm going to go out on a limb here and say this might be the best group of people that assembles to talk markets and, I don't know, dip our toes in some conspiracy theories and politics from time to time. But do us a favor, just type in random ass characters into that chat. We can spoof the Google algorithm into putting us in front of as many people as possible and save the world one view at a time. And damn it, I'm going to believe we've already started that process. Speaking of the people, because this is a podcast by and for the people, let's say what's up to the people. Shout out to everybody in the YouTube chat. Start typing now. Because if you don't get those characters in, I'm not going to shout out your name. I got a little bit more time since we don't have a guest. The wonderful producers have already got your screen names and your comments up on the screen. Somebody made fun of me for calling them screen names. They said, "Oh, I could tell somebody was born in the '80s." What's the word? If it's not screen name, what is it? What's the new handle? I'm not saying that. What's up, Brian? What's up, Cactus Leo Lone? Great to see you again. Sleepy Mocha, what's up, Brian Watson? Agent X, what's up? Dav, what's going on, Jay? D-Chat, Ben, Christian, absolute beginner, and so many more. Absolute beginner says end of year 7,000 question mark. Jordan says AOL user. I know, bro. I know. Remember the sounds it used to make, like the opening door, closing door, when people would get online or leave? Oh, we were idiots back then. We didn't know. You know what? If we knew what we know now, would you have taken the CD out of that envelope and put it in, or would you have just kept throwing it in the trash and said, you know what? I don't like what's on the other side there. I'm going to keep going outside and playing with my friends. I think I might have kept throwing that damn CD in the trash instead of popping it in one of those days. What's up, Jordan? Adam Green, great to see you from Australia. You're out this way, Adam. Out this way. I've never been to Australia yet, even though I'm pretty close. Hey, Retta, what's going on? So shout out to everybody. Do me a favor as you come in, hit the like button if you'd be so kind. And if you're watching and you can't type in the chat, it's because you're not subscribed. So make sure you're subscribed to the channel. Before we get started today, there's a lot to talk about, not only in markets, my good friends, not only in interest rates, my good friends. You heard from your favorite Romy Rome, Jerome Powell, earlier today. We'll talk about that here in just a little bit. But before we get to all that, I was just made aware that one of our producers, and I'm not going to name him unless he wants to name himself, is absolutely fantastic singer. And this is a burly guy, okay? You know, this is Chicago. You ever read that poem? What is it? City of Broad Shoulders, something of that nature. Shout out to Frankie Walsh, wherever he is, who introduced me to that poem. But it speaks to the Chicago essence. Hog butcher to the world is one of the first lines. This guy embodies what Chicago is. And you would never, he opens his mouth, he's got the voice of an angel. Everybody, I would like to introduce you to one of our producers right now. I'm singing a little, look at this, the party started with a little Red Hot Chili Peppers. What do you say?
Oh my God, you're way too kind. Standing in line to see the show tonight, and there's a light on, heavy glow. By the way, I tried to say I'd be there, waiting for. How about that? Is that good?
Oh,
is that good enough?
My goodness gracious. Can I say your name? That was beautiful. Can I say your name?
Oh, they know producer Ryan.
That is producer Ryan, the man behind the ones and the twos. Give him a like, drop a heart in the chat. Give me some fire emoji icons. Give me something. Amazing. Thank you very much, my friend. And by the way, now that you've done it once, they're going to ask for more. I'm just letting you know. All right, everybody. S&P 5,000, or excuse me, S&P 500, at least the futures anyway, crossed 6,000 today. 6,005.25. Cash, we were up 0.75%. What are they saying? They loved it. They loved it. They loved it. I knew they would, Ryan. Here's the bad thing. There's probably some talent scout out there, and they're going to come snatch you away, and we're gonna be one producer short. But just don't forget the little people, and don't just say no to the Diddy parties. If you make it, just don't go. Sometimes you got to tell them no. The Nasdaq up 1.5%. In the cash, up and away. Did that have a lot to do with yields, NVIDIA, and the like? I'm sure it did. Dow Jones, a big old squadoosh scratch today. The Russell down 0.2%, after massively outperforming yesterday. A little bit underperformance here today. Let me talk to my people for just a second. I'm curious, everybody, now that we're on E-mini, S&P 500, 6,000 with the quickness is what we like to say back in the day in my little neck of the woods. With the quickness and about 3 sessions here, what are you doing? Vol, let me say this. Going into the election, I think we announced, we're very clear, no idea, right? No idea, but don't want to be short. That's something we said. Want to have downside protection in the case. Unfortunately, vol was pretty expensive, and the highest likelihood was that those hedges they're going to take vol out, and that we were going to see a little bit of a melt up. And by gummit, that's exactly what we've seen. A little bit, a nice little 3-day face ripper rally to the upside, S&P 6,000. But the question becomes, what do we do now? Indy saying, tasty karaoke. That is a sick idea for a segment, by the way. Sick idea. The question is, how are you guys feeling about risk now? You've gotten now to the other side of some major earnings announcements. You've gotten to the other side of a presidential election. You've gotten to the other side of a FOMC cut, and all that wall of the bricks in the wall of worry. You're now on the other side of uncertainty. The problem is, as soon as you get your uncertainty, the market's already captured all of that advance. So now that participants have the opportunity to feel more comfortable. Oh, we're, we didn't crash on the election. Geopolitical tensions are sort of normalizing a little bit, or at least they haven't escalated. We got the cut. Bonds aren't going crazy. There's a little bit of a rally here. Now that everyone perhaps is in a situation where they start to feel comfortable, the problem is all the upside has been eaten up by the market. At least the easy money has already been made, and that's sort of how the game works. But you might not feel that way, right? You might think that now that we've climbed this wall of worry, there's more upside ahead. And so I'm very curious to know, with this diverse group of people, how you guys are all thinking about risk here. S&P 6,000. Let me ask you this question: are we more likely to hit 6,200 before we hit 5,800? I'm curious. Tell me what you guys think. Because my question is, when I look at vol, I see that massive, just insane vol crush. We're now down to 1520, okay, which is below long-term historical averages. VX futures, again, what's that, 4 or 5 sessions in a row of just a straight rollover here. So on one side, I would think, on one side, I think we're a little bit expensive, but I've thought that for a while, in fairness. But my upside catalyst was that people are either going to monetize their hedges, or all that decay on those hedges is going to cause upside buying. And it seems like now with the VIX at 15, probably a lot of that's gone. Probably a lot of that's out of the market. The upside melt up just due to vol crush in and of itself is over. And now what do we do? And I'm curious what the people have to say. You guys are not piping up. We go to 6,100, then a 5% pullback, says PM. Noah says higher by December, lower by January. Yeah, so that's the concept of that. The what's that? The Santa Claus rally. I just disdain this concept. You have no idea. I'm not going to start it early. They're starting to put up Christmas decorations. We haven't even got to November yet, and they're playing Christmas music everywhere. I don't like to get too far ahead. I'm gonna save my rant on the Santa Claus rally until later. But I just disdain that concept. Higher until next VIXpiration, via 5,800 first. We buy DJT. I don't know, man. What's the point now? I don't get what the point would be. In some ways, this was an election probability play. In another way, it was like a roundabout campaign contribution. What's the point of owning it now? I don't get it. Not hating, just don't get it at this point. It wouldn't surprise me to just see this thing do a slow bleed, because if you imagine, this is a pretty interesting topic to start off with, and I did not plan to go in here. But Bah Humbug says we buy DJT, the Trump Media Corporation. So there's some part of me that goes. In September, late September, you saw Mark Zuckerberg start to do sort of a public pivot towards like this libertarian Zuck. And I had this conversation with somebody sort of in my DMs. Shout out to everybody on Twitter. My point was, you can change your political ideology, but doing it publicly what's the point of somebody that prominent changing or making sure everybody else knows that they're pivoting from hundreds of millions of dollars of donations to this side and pivoting towards the middle? In my personal opinion, that was a gentleman with access to tons of data and analytics, and he saw the writing on the wall. And I think moving closer towards the middle as just a business person and making sure that people know that you're pivoting towards the middle probably makes a lot of sense. And so same thing happens with Jeff Bezos, right? A little bit later, but now we're talking late October. His newspaper, the Washington Post, is ready to endorse Kamala Harris. What does he do? He blocks the endorsement. And he says, this has nothing to do, we should have done this earlier, whatever. Call me crazy, and I have no real evidence for this. This is just playing poker type of situation. Again, another gentleman with access to tons of data, tons of analytics, and just a week and a half before the election, if you had access to all that data, and the data was as resounding as what the election results ended up showing, would you want your newspaper's credibility on the wrong side of that? Probably not. You probably wouldn't. And I think a lot of people saw it as some capitulation to threats. I don't think that's what it was. I think it was moving to the middle as a smart business decision and making sure you try to protect the integrity and the credibility of the asset that you own. It's an asset to him. And so I sort of saw that. And so my question becomes, in a world where the public sort of rejects censorship, they reject and they embrace two-sided debates and discussion, in that world, and in a world where some of these owners of media corporations seem to be, at least we're seeing the first tea leaves of people sliding to the middle, what's the value of DJT? What's the value proposition of a Rumble, right? In a world of less censorship, a world where you can speak your mind on major platforms, if that's where, in fact, we're headed, if people choose to trust them in the same way, what's the value proposition of some of these alternative platforms? And I'm not dogging them. I'm just asking the question. So I don't know. There's a weird sort of aside there, but that's my take. That now you get to the other side of this, the people spoke about what they sort of want to see and don't want to see, and I think a lot of business owners are going to drop some ideology that they thought was playing and move towards a more fair and balanced perspective. And if that's the case, you got to rethink the value proposition a little bit. Anyways, let's see what else. Stephen Crane says he read the tea leaves. I'm just taking a guess. I could be totally wrong. It could have been total benevolence. Could have found Jesus and just said, this is the wrong direction. As a newspaper, we need to be unbiased. Same with Zuck. It could totally be benevolence, everybody. Call me crazy, but generally speaking, I think people that do really well at that level of financial success, your game theory is so good. It's so sharp at that level. Just like I did. Interesting. I'll talk through that one a little bit towards the end, Stephen. I'll do it now. So what happened in my case was I took a year and a half off, and I did a lot of researching, a lot of study of history, a lot of study of civics in my city. I wanted to be a part of a solution in the city, and the more research I did, the more understanding around policy and impact and incentive I did, the more I changed my mind about what was going to be helpful for the people that I cared about. And I made a commitment. I said something to one of my good friends, a good friend I consider a good friend on this network. I said, if I speak, I'm going to say something meaningful, and I'm going to speak my heart, I'm going to speak my passion, and even if I'm wrong or I'm perceived to be wrong, if I'm speaking my truth, that's all that matters. And those people could feel the exact same way, and I told you, I'm not taking it away from them. But I don't think there's a big career bump in this for me. You know what I mean? I don't think there's billions on the other side of me like expressing my opinion here. So I guess that's a difference. But you're totally right to call it out, man. And I appreciate that. I appreciate a world of people who are going to look at people critically and evaluate their incentives more than they evaluate the words. So, Stephen, I appreciate that inside fastball. You have every right to throw it, my friend. All right, let's talk. Let's talk the interest rates here. What a crazy day. What a nice little rally across the curve. Who had that in their bingo cards? I mean, but we had priced in a lot of. We'd priced in this cut. We knew what it was going to be. The only question was going to be the Q&A session. And wow, I should have queued up a clip. My sincere apologies. One of the best exchanges. If you didn't see it, I know most of you are not crazy like me. Most of you do not get up early to go watch a congressional testimony. You're not going to sit there for a few hours and listen to 2-day testimonies, and you're not going to listen to the Q&A session of a FOMC announcement because you have lives and you're cool and you go outside. But I think this one is worth watching. If you didn't watch it, this one is worth watching. And there was an exchange in today's Q&A. It was a back and forth between a set of reporters and Jerome Powell. And the question followed exactly what we talked about with Ilya yesterday, which I was like blown away by Ilya's response. I thought it was totally fair. I thought it was totally balanced. And I thought it was brilliant. It was sort of brilliantly thought through. And I hadn't told him I was going to ask that question. I asked Ilya, in the past, there was a very contentious relationship between President Trump and Jerome Powell. And rates, I think Jerome Powell at that time was trying to bring rates up. And the perception of the public is that Donald Trump browbeat him into lowering rates. True or not, that's the perception of the public at the time. My question to Ilya yesterday is, what's that relationship going to be this time around, post-inauguration? What's that? Do you have a reason to believe you'll see a contentious relationship in a world where we have higher rates? That yields in the long end of the curve are higher. We're at 4% in the short end, 4% in the 2-year, around 5 in Fed funds rate. And he said, in so many words, and I'm paraphrasing, that Trump can be transactional. If he's driving a negotiation, there's room for contention. And if there's no need for contention or negotiation, that his focus is elsewhere, that we need not see that level of contention. And I thought it was a beautiful way to answer the question. Absolutely beautiful. I thought he was 100% right. But the interaction today was along the same lines. The question from the reporter was, some of the president-elect's advisors have suggested you resign. If he asked you to leave, would you? And then Powell said no. Just one-word answer. Then the follow-up question was, do you think that legally you're not required to leave? Again, his answer was singular word, no. And this is why I've been trying to tell people that there's this assumption that he's just going to fire him and replace him with somebody that will lower rates. So first, I don't think his term ends until, is it 2025 or 2026? Now I'm forgetting. It doesn't end immediately. I think it's 2026. I might be wrong. Check me on that. But to impeach the sitting chair, it's difficult. It's not easy. It's not easy to do, and there's not a lot of standing precedent to get that done. So I think people are under this impression that you can just come in and boot him, and that's not the case. The follow-up question then was, do you think the president has the power to fire or demote you? So keep him on the FOMC, but demote him from chair. Powell says, not permitted under the law. And they asked, what was that, or not what? And he again says, not permitted under the law. Super concise. It was, 5-word answer. And I thought that exchange was interesting, right? Because, in this world of balanced risks, where we have our Federal Reserve chairman speaking to, he's a two-handed economist right now, right? He's the we need to fight inflation, kind of, and we need to look at or maintain employment, maximum employment. We don't want to cause a bunch of people to get laid off or fired. So we're constantly talking about balanced risk. And then on this very specific question, he was specific. There was no either or whatever. He defended his chair, as Andy Constant said today. And I think that's 100% right. But what a wild way to sort of start this first couple of days of a new administration, especially given what Trump has said in the past. Remember, in the early parts of his campaign, he effectively said he thinks Powell is playing politics and he would replace him. He subsequently, months later, softened up. And I think the next 4 years are going to be fascinating. Not only what happens with the remainder of Powell's term, but then on an appointment of a new chair, which will come up in a year or so. Let me pause for a second and talk to you guys for a second. Vic, can you recommend books on game theory? Damn, I don't know if I have a ton offhand. To me, I think it's not exactly game theory, but Annie Duke has a good book, Thinking in Bets. And then I literally I have a handful of like the Beat the Dealer, and then there's this modern poker theory book. So it's just poker theory, but there are better books on direct game theory, I'm sure. I bet Jim Schultz would be a much better person to ask. Good question, though. If anyone else has a better recommendation than my ramblings, throw it in the chat for our friend Cactus Leo. Or, excuse me, Zero Expiration. Vic, we need another show from you and Tom like you guys did a week or so ago. It would be amazing and entertaining. He comes on here once a month. So we're due for his November appearance for sure. I don't know if he's not answering my text yet, so I got to give him a few days. Let's see here. Victor, today you were awesome. Tom was 2D only. I just think, here's the thing. I just think a lot of people have woken up to the games that some of our trusted media institutions are playing. And it's really hard. You have to have some binary event that wakes you up to it. So if I ask you guys, and I was having this back and forth the other day as well, for me, it was the first time I watched a 3-hour, 2-hour RFK interview, a podcast, I go, that doesn't sound anything like what they said. I thought this guy was a conspiracy theorist. I thought this guy was a nut job. And then I watched more. I read his book. I read a few of his books. I rewatched some of the old interviews with a new mindset, with a new set of open eyes. And then I started to, once you get that, then you go, well, what else is going on? And maybe you start to, think a little bit more deeply about some of the messages that you're receiving. And I just think some people have had that experience where they see it. And then there's another group that haven't had that experience. And I don't fault anybody who hasn't had that experience. It's hard, How did we get to a place where so many institutions are either explicitly lying or have put so many people in positions that they have an inability to see a broad and fair perspective? And so, I don't get mad at anybody. I don't get upset or angry. I see it with empathy. And there was this interview that RFK Jr. did where he said the best way to approach anyone you feel might be in that particular situation is through the Socratic method. You just ask questions. What do you think about that? What did you expect to see? Is that the outcome that you would have expected? Is that the outcome that you hope for? These types of things. You just sometimes asking questions is a better way to get to meet somebody in the middle than telling them why they're wrong and being combative. I don't think this morning was an example of that, though. Let's see here. It was good. D-Chat saying it was good. You can tell he's prepared. Back to the question of Jerome Powell. Absolutely. He knew it was coming. Trump appointed Powell. I don't think so. I think Obama originally appointed Powell to the Fed, and the chair I think might have been Trump, yeah. But originally I think it was Obama who appointed him to the Fed. Let's see. I think Powell sent the message to Trump to stay clear so he can finish making this soft landing. Yeah. I mean, to me, there's some part of me that thinks the long end, it's in the long end's hands now. And, if we have, whenever the budget, I think we have until February, if we're on time with the timeline, sometime between February and like June, you'll get a budget. And if that budget is fiscally responsible, who knows? Maybe bonds play ball. If that budget is fiscally irresponsible, I think the bond market's going to make it harder and harder and harder to be irresponsible. And so I don't know what range we play in from now until the first time we see a budget, but I can imagine it's going to be a very, very, I know the cuts and the FOMC announcements, all that's going to be important. But I can tell you, I'm super excited, if that's the right phrase, to see the first budget that comes out of the administration. What does that actually look like? Because all these campaign promises and the CBO's budget projections, I don't know what that actually means, and I don't know what that means in a world where bonds are trading at 117 and we're flirting with 4.5% in the 10-year. Like, I don't know what that means. I think at some point, once you get past the campaign, you have to be honest, you have to be sober, and you have to respect the bond market in a world where we're not running ZERP and we're not running QE yet. I think you got to be honest. And, I think in a way that's what the Clinton administration ultimately had to do. They respected the bond market and they balanced the budget. And we haven't seen anything like that since. Who knows? Who knows what could happen? Let's see here. You guys are being super active. Thank you very much for all this activity here in the chat. Papa Pow Pow is going to stage his own jam. Oh, Ben, that was too funny. Let's see here. Powell went full Jordan Belfort. I'm not effing leaving is what that absolute beginner is referring to, that line in The Wolf of Wall Street. Because I'm not effing leaving. They made a statement that he wouldn't be asked to leave. Yeah, I think again it was a spicy little question. Some part of me believes that wasn't an accident. The people that are allowed in those rooms and the questions that are asked to the Federal Reserve Chairman, I stopped believing that those were just random and unplanned a long time ago. I'm sure there's some aspect to it. If you're Steve Leisman, maybe you get a little past. All right, I'll get a couple more of these in here, and then we'll keep going. Katan, what's going on? Great to see you. Theory of Games and Economic Behavior by Von Neumann, Cactus Leo, with the suggestion. Thank you very much, Cactus. Victor, China stimmy pump tomorrow. Yeah, baby. What do you mean tomorrow? We already got one today, bro. Are you not watching? You didn't see? I'm telling you, man. I think there is at some point, there's going to be this question of whether the economic stimulus is working. But I think what the market sees when it comes to China is you have to pull the trigger. So we're going to find out if it works. We're going to find out if they spend. But for now, you got to they're going to turn that money gun on. And I think that's why you didn't see a full retracement of this move. I think this was just too deep of a valuation, with a 7 forward PE on a lot of these Chinese complex that was ridiculously cheap. You get a repricing here, and now with each of these announcements, and the question was post the election. Chris did an excellent job of bringing this up. Usually, they don't really make the Politburo doesn't really make a lot of these announcements on the economic policy until December. So the fact that they did it earlier was in a way showing commitment to the issue. In my personal opinion, I don't know. I'm not an expert like Ilya. I just stayed at the Holiday Inn last night. So at some level, to me, they're showing a commitment to this particular issue. And with each of these announcements, man, you have the potential to see the bump. And at some point, we're going to figure out, are they spending or not? But that's well after they keep pumping. Gapper X, mathematics of the mind and probability and simulation. Appreciate it. I haven't read any of these, so you're giving me some recommendations here. Please don't. Where was that? Something just glitched here. Literally the Bible for game theory. All right, please don't mess with the FDA, please. Oh no. Oh, you're in for a wild ride, Catan. RFK is going straight for the FDA, and good on him. Let's see how Janet Yellen's policies change from now through January. Stephen, I'm curious, what do you mean by that? What do you see as the potential pivot here? You mean for them not to just be spending money like it's going out of, like it's going out of style? Is that what you mean? Basically, they slow down in that fiscal impulse because what the hell? What's it matter? The lame duck period doesn't matter for them. And if the economy slows, it's not their fault. That type of situation. Is that what you mean? Let's see here. Victor. I don't want to read that one out loud, but I hear you, Magic Shoulder. All right, I'll do a few more and then we'll go. Larry Kudlow, not gonna. Larry Kudlow. All right, let's keep going. Mr. Moneybags over here staying at Holiday Inn. All right, let's keep going. 2-year yield at 4.19, right around 420. And, the interesting thing, if we take a look at rates here, let's refresh this. My apologies. We got a little bit of a bump given what was said in the probabilities of another cut in December. Yesterday, I think we were at 67%, so we bumped up by about 5%, getting us back into the mid-70s. I had said yesterday with Ilya that we wouldn't cut in December, but it seems like I think Goldman Sachs or somebody I believe it was Goldman, put out a note today that they believe that after December we start going at one cut per quarter clips. So that the market expectation is for them to, again, get another 50 basis points in before the end of the year and then slow down to a once per quarter pace. Which it seems like it could make that, I don't know. Seems like that could make sense. Because on one end, you're loosening and you're giving the market 3 months to sort of digest and slow down before you pump it up again. But I think we shouldn't be under any. I think the likelihood that we're about to see a reinflationary period, and we're already seeing that. I think you're seeing assets reprice. Are they pricing in tax cuts? Are they pricing in new revenue optimism? Maybe. But I guess if you're looking at what yields are doing, if you looked at what metals did up until just recently, to me, I think they're pricing nominal prices higher, and the fact that inflation is going to be running a little bit hotter. Give me just a second. I'm waiting for the pullback to load the boat, says JBATL. See, here's the problem, and I don't disagree with you, JB. But we're nowhere we're not at the inflation target yet, right? At 2%, and that's if you believe that number is actually 2%. We increased the money supply on average 6% a year. That's gone up. So the question is, if you're sitting in cash and we're about to add $7 trillion to the debt, if you believe that in the next 4 years, what are you not getting buried by depreciation and debasement right now? So this is the question that all of us have to ask ourselves. And I forget the person who put this out there. I thought it was a great sort of way to frame exactly what's going on right now. As you have two choices. You can either buy or hold expensive stocks, or you can go in cash and get murdered by currency debasement. That's a tough question, and there aren't a ton of great answers to that. In hindsight, you'll know the answer. If you have a strong feeling about what the future brings, you might think you know the answer, but the reality is none of us really know the answer to that little conundrum that we're all in. Do you buy objectively expensive stocks here? Or do you try to protect capital knowing that you're going to get roasted by your purchasing power is going to get roasted? That's a tough choice, man. They've made a very, very difficult choice. Catan, let's talk about reverse repo market. Not today. I'll have somebody in to do that. I'm over my skis when I talk about stuff like that. Vic, what are the chances RFK rushes into the FDA looking to wreck shop and gets to see behind the curtain and has a second thought? I know the first part is probably 99%, because he's already said that. Has a second thought? I don't know. Because why would he have a second thought? Like the issues, the meaning whatever he thinks are the problem, if he gets there and sees evidence otherwise, that's one thing. But then if the problems are so bad that he doesn't want to touch them, I don't think he's got that type of character. Hold on, give me a second. Hey, buddy. Hey, buddy. Hey, buddy. Very, very nice. Nice job, buddy. Daddy's working, okay? Okay, I'll be out in a second. I love you, buddy. All right. So I don't know what the odds are that he has a second thought. I highly doubt that. I think he's got a lot of experience in that space. I think he knows exactly what he wants to do. So I don't think that's likely. Christian Kohler says, Victor, the yield curve is still inverted. What happens if it gets fully normal? What yield curve? Oh, okay, I get what you're saying. It is true. The yield curve is still inverted. Let's refresh this and make sure. Let me get the most up-to-date prices. There we go. It is true that we're inverted in the super short end of the curve. Everything under 2 year. So normally, the more time you have, time is synthetic volatility. So the more time you have for something to happen, the more potential risk there is. And so in debt markets, the risk is repayment, right? Or the purchasing power of the repayment. And so typically then a normal yield curve, yields go higher out in time. And in this case, we've had just this mangled yield curve for years now. And we've started to see a lot of that uninvert, right? The 30 versus 5, the 10 versus 5, the 10 versus 2, all that stuff starting to get a lot more normal. So what the yield curve is essentially saying that within the next 2 years, that's when all the action is. So the yield curve kind of expects, like the 2 year saying in 4.28%. but Fed funds rate at near 5%, 4.75%. The expectation is that within the next 2 years that drops, and that's going to get it will get to or below that 4.25%. And that shouldn't be a surprise. That's what the SEP says and has been saying. So, so the question is, what do I think happens if we uninvert? I mean, we have the biggest, to me, the 2 and the 10 year as a trader are the most interesting. Now, George Robertson has said that has left, that its relevance, it's no longer relevant, that you have to look at, I think he looks at like mortgage yields as a true representation of the yield curve. And I think if you talk to economists, they'll tell you that I think it's the 10-year 3 months is the yield curve that you actually want to look at that has the highest probability of predicting recessions and everything like that. So, I can't tell you what it would mean if we see an inversion or an uninversion. I think the big moments, those uninversions, they already happened. I think the next 2 years is a lot of uncertainty as to how this plays itself out, because on one hand you have geopolitical risk and global cooperation. It's not like there's this globalized synchronization in terms of how to execute monetary policy. At some level there is along Western developed nations, but it seems like there's a different group that's playing a different game. One group's trying to weaponize the US dollar, one group's trying to weaponize commodities and inflation. And we're in this big economic game of chicken right now. And so you got that in the background, coupled with sky-high debt to GDP ratio, coupled with a Gini index that doesn't make sense. So wealth inequality is crazy. So you have to manage social volatility within the countries themselves. So there's a lot to manage through, man. I wish I could tell you, and I don't have an answer. That's why every day we come in here and try to figure out what's what on a week-to-week or expiration-to-expiration basis. And then when things get cheap, we acknowledge that we do not know what the future holds. But when things get cheap, we take bets, right? When China was cheap, we took a bet. When nuclear was cheap, we took a bet. When gold miners were cheap, we took a bet. We're going to keep doing the same thing here. And it doesn't mean we know the future. It just means that we've got a good understanding of the incentive structures that guide our politicians and their policies. We have a good understanding of incentive structures that are guiding the competition between countries. And we have a good understanding of risk and reward. And we're gonna try to take decent risk and reward bets, and we're gonna acknowledge we're gonna be wrong and have pie in our face, but we don't care, because that's the game. Sometimes you win the hand, sometimes you lose the hand. I don't know if that answered your question. I'm pretty sure it did not. I blacked out there. Kiddo interruption. Yeah, man, he's the best. He's the best. Bear steepening. That's what you're seeing, Stephen. That's what you're seeing, and there's some part of me that thinks we're going to bear steepen up to a point, and then you bull steepen. We're in the bear steepening phase, but they reinforce the idea that we're headed towards 3.5% in short end rates, which to me makes sense, because what have we been saying? We've been saying, we looked at the long-term relationship between the 2 and the 10 year. I know I sound like a broken record sometimes, but I think these concepts are important. That the long-term relationship between the 2 and the 10 year is about 100 basis points. And if you can imagine that the 10 year is flirting with 4.5% now, close, right? 4.3, something like this, and that we're going to get to short end rates at 3.5. What's the difference, right? Somewhere around 80 basis points. And so that sort of makes sense, that we're headed towards a world of normalizing the yield curve, normalizing rates, and it seems like that's where they want to drop them. Whether or not they get them at 3.5, see, the problem becomes, if we want to spend money again, what happens is it's going to pull, in my personal opinion, I shouldn't say this with certainty. What could happen, ceteris paribus, the most dangerous phrase to a trader, but if we keep spending money without finding ways to pay for it, it's going to pull the long end higher. As it pulls the long end higher, it's also going to pull what is called the neutral rate, the theoretical number higher, which means short end rates come up, and we perhaps don't drop them to 3.5. We drop them to 4, something like this, which means the long end maybe park somewhere around 5. If we don't spend money like it's going out of style, if we're fiscally responsible, perhaps the neutral rate it shifts lower. Perhaps long end bond rates shift lower, and the neutral rate shifts lower. So I think that's why I think it's really important to watch the budget that they put out this year. Let's see here. Little Vic drew the 3-month 10-year uninversion. Good job, bud. I'm telling you, this little dude is almost 5 years old, and he's 10 times the man I've ever been. Let's see here. What else do we got? Anything else on the yield curve? I don't think so. Hate, I sold all my ES futures other day, 58.50. Damn, didn't see 6K coming so soon. Oh, that's not the way to play it. Don't worry about. Can't worry about lost profits, right? That's the way to ruin. So to talk about my risk on the board here right now, I've got a little bit of upside deltas in ZN. I think it was the 113, 116 call spread. The 116 went to nothing, so I'm just long 113 calls. I think just some out of the money lottery tickets now. ZB, I actually have some 119, one something call spreads, a few of them on. It's not because I have great conviction. It's not in big size. I don't have huge conviction in being long bonds, but I've been saying it here on the show, and I've been saying it on Twitter. I don't know. It just wouldn't surprise me to see a little bit of release tension. The MOVE index, which is like the volatility of interest rates, was crazy. It was at like I can't forget the number of months. 13-month high? 13-month high? I can't remember the number. It was at a high within a year's time. And I think, so you get that. It's in the same way the equity markets are getting this vol crush, which leads to higher prices. I think that vol crush in rates could lead to a little bit higher prices as well. Just short term, traders bounce. I don't want to bet it big, but I am leaning long deltas in ZB as well. Let's see what we got. Kids grow up so fast to enjoy every moment. I know, man. I know. He's got a performance today at school. I can't talk about my son. I'll start tearing up on all you guys. I can't talk about my son or my daughter. I'm a big softy when it comes to that stuff. Okay. So let's go Bitcoin for a second. Bitcoin just nasty, man. Up to 76. This is a hard one. This is a really hard one because there's no part of me that wants to fade this at all. There's no parts of me that wants to fade Bitcoin, and I just don't. I kind of want to buy some more, but I don't think I'm getting a great price entry. Coinbase, I just got lucky. I think we had a 230. I say we, like I've got some trading team. It's just me. The 230, 240 call spread on, which I got lucky after the election. So I took those off, and so now I just have a little bit of stock. I don't want to get rid of that. I don't want to get rid of that. I think what you're seeing right now in Coinbase is a little bit of discounting of a new head of the SEC, You're seeing a little bit of discounting, not discounting. You're seeing a new price, a repricing of Bitcoin at 76,000. I think all those things are great for their business. So does it surprise me you get 180 to 260 move? No, but you are again at the top of the range. Do I want to buy it here? No. Do I want to fade it here? Ugh, I can't. Same thing. So I just think Bitcoin's in this weird place, man. I'm long and I'm not selling. I should sell. But I'm not going to. I should probably sell. And Coinbase, I'm long the stock, but took off some deltas. So I'm peeling off some deltas on some of the stuff that ended up working. I talked to you guys about Tesla as well. I think we had almost the same strikes. It was the 240, 250 call spread in Tesla, which I took off yesterday. Can you believe this thing? $300. $300. That's how much pressure was on this stock. If the Department of Justice was going to come after Elon, that's how much they priced in. Joking aside, so I made the point earlier, really quickly. I made the point earlier about Zuck seeing something in his data in September. Then the point about Jeff, and a guess that Zuck saw something in the data in September that caused a pivot, and a guess that Bezos saw something in his data that caused a pivot at the Washington Post. I think about Elon. I think about when Elon started making this sort of this pitch about the First Amendment, and then he went on his crusade and ended up buying Twitter for $44 billion, sort of wearing that trade as it slashed in half instantly. There's some part of me that at the time I thought this is I thought there's a part of this that's genuine. Then there's another part of me that goes, I think he sees the political pendulum. I think he sees the wind swinging backwards. And there's some part of him that wants to get on the right side of that move. And I could be totally wrong. It could have, again, all been benevolence. It could have all been his individual values. I put that past nobody. But whether it was sort of game theory, a risk to reward type situation coupled with values and perspective, or whether it was just pure timing. Just think about his move from where he was and where he was perceived politically and what groups of people supported Tesla, to his move to Tesla shareholders saying, what are you doing? That he's taking massive risks with Twitter. He's getting distracted. Now he's getting political. He's not doing it justice to his shareholders. Now look at where we're at Tesla 300. And I think for all the naysaying, and he deserves the criticism, but I think when you come out of the other end and you go, look at this guy, he's potentially going to be running a department in the next administration to cut out spending and waste and identify fraud and abuse potential. And he has the ear of the president. That's a huge swing, man. And he saw it first. And when you see it first and you make the move, this goes back to the concept of consensus is the least valuable opinion. When he made this, he got so much shit for it. When he made this change, when he made that shift, when he started singing from a different hymnal. But look how consensus has shifted, and it has come towards where Elon was maybe a year ago or so. I don't know when we started this thing. And the payoff was not just for Elon. It's for Tesla share. In the end, at least for right now, it's for Tesla shareholders as well. And I think that's worth noting. I haven't heard anybody really talk about that aspect, that this guy took massive risk and you didn't like it when he first did it. None of you liked it. Everyone wanted him to shut up. Everyone wanted him to sit. What do they say? Sit down and dribble. Shut up and dribble. And now he's got an ear to the president. Now he's got a direct line to the president. And the previous administration, mind you, this is how big of a swing this is. The previous administration had a summit on electric vehicles and didn't invite him. And now he has a direct line to the president. He could be running or an advisor to a department in the government. I just think not enough people talked about that. I don't understand why. Let's see here. Selling BTC now would be like selling gold on its cup and handle breakout. BTC is in price discovery and much higher log scale levels. Yeah, I think if I was just going to bet this just completely ignorantly, I think the budget is probably to sell the news on Bitcoin. And from now until then, you get the assumption of what he might do. If he starts talking about a lot of stuff in his budget, sort of foaming the runway, maybe I'll be wrong. But I think that's the possibility here. Like from now, you got this window from now until they drop a budget or start talking about their plans for the budget, that's the sell the news event. Vic, all these guys play whoever can give them the advantage, and Elon, Zuck, and Bezos played chess very well. I think so. It comes down to game theory. I think at some level, I don't want to put it past them that they have the capacity for human emotion and change and evolution as individuals, and that they're acting organically. But I do think at that level that there's many different considerations. Yeah, LOL, Bezos kissed the ring. Vic reads FOMC reports to his kids at bedtime to help them fall asleep. That's funny. I don't do that. But we rehearse these character traits. So I wrote out all these character traits, and sort of some financial terms too. And we go over those. All right, gold at 27.15 today. I'll just do a few more. We're going to end a little bit early because I got to go to this performance. But gold, a little bit of a rally here today, a little bit of a relief rally. I didn't catch the gold short. I had told you guys I thought we could see a rollover. I don't want to short it. I just want to buy dips. 26.50 didn't seem cheap enough to me, but joke's on me. We're at 27.15. That cut probably helped it. Same with silver here at 32 and change. I have no silver. I think I did, but all stuff that I was just going to let ride. And I don't think gold's cheap enough to buy just yet. Look at that crazy move in copper. Absolutely insane move in copper over a 2-day period. And if you catch that, you'd have to be the luckiest SOB in the world to catch a short on one day and a long on the next day and ride them both. Bitcoin 81,000 coming. I would bet it. I just told you I'm long that I trade Bitcoin and I hold it. On the trading side, I'm long, and I don't think 76 is enough. I want more. I want more, baby. Hey, is Ryan still here? No.
By the way, I tried to see.
That's how I want to take it out today, okay? So just be ready. Let me say bye to everybody, and I want to take it out on your beautiful angelic voice, my friend. You ready? All right. Everybody out there, do the same one, baby. We're doing the same one. Everybody, do me a favor. Hit the like button on your way out of the door. We're going to end a little bit early today. It's been a crazy week. I haven't gotten much sleep, and I got to go to my son's performance. We are going to extend an invitation to our good friend Brent Kachuba over at Spot Gamma, as well as an invitation over to Ira Harris to come in and help us make sense of this crazy world. So likely next week we're going to have guests on all 4 days. I appreciate all of you. Thanks for letting us have some crazy conversations here. Thanks for letting us talk conspiracy theories. Thanks for letting us wade into politics from every now and again, and every once in a while have some trade ideas. And with that, everybody, we're going to end it. Hit the like button. We'll see you tomorrow. Same time, same place, same great network. And for your listening pleasure, producer Ryan's going to take us out. with Little Red Hot Chili Peppers. Take it away, Ryan.
Danny the girl singing songs to me beneath the marquee. Overload. Thanks, guys.
Thanks, everybody. Take